my business partner stole every client we had, all 47 of them representing $8.3 million in annual revenue. He did it systematically over 6 months, secretly meeting with each one, promising better service and lower prices if they moved to his new company. By the time I discovered what Marcus was doing, 31 clients had already signed with him. The remaining 16 were in negotiations. Marcus walked into my office on a Tuesday morning in October 2023 and handed me a letter of resignation. "I'm leaving, David," he said, not even trying to hide his smile. "I'm taking the clients, the employees, and the business model. You can keep the company name and this office. Good luck rebuilding." He expected me to fight him, expected lawyers, lawsuits, injunctions. Instead, I looked at him across the desk we'd shared for 19 years and said, "You're right, Marcus. You've outplayed me. Take it all. I'm done." Marcus looked confused. He'd been prepared for war, not surrender. But I signed every document he put in front of me, transferred my shares to him for $1, handed over the client files, the employee contracts, everything. Within 2 weeks, Marcus owned 100% of Davidson and Sterling Consulting. What Marcus didn't know was that he'd just bought a company with $4.2 million in undisclosed liabilities, 3 pending lawsuits, and an IRS audit that would destroy him. I'd spent 6 months preparing my exit while he'd been stealing my clients. And now I was going to watch him burn. My name is David Sterling. I'm 67 years old, and I spent 33 years building Davidson and Sterling Consulting from scratch into one of Chicago's premier management consulting firms. We specialized in operational efficiency for mid-sized manufacturers, helping them streamline production, reduce costs, and increase profitability. It wasn't sexy work, but it was lucrative and steady. By 2022, we had 47 clients, annual revenues around $8.3 million, and a reputation as the go-to firm for manufacturers in the Midwest who needed results. Marcus Davidson had been my partner for 19 of those 33 years. I'd brought him in when the business got too big for me to handle alone, a smart, ambitious 35-year-old with an MBA from Kellogg and experience at McKinsey. We'd built the firm together through the 2000s and 2010s, surviving recessions, adapting to market changes, growing steadily. I'd trusted Marcus completely. That was my first mistake. The business had always been structured as a 50-50 partnership. Marcus and I each owned half, made decisions jointly, split profits equally. It worked well for years because we had complementary skills. I was the operations expert who delivered results for clients, and Marcus was the relationship manager who brought in new business and kept clients happy. We'd built something good together, or so I thought. What I didn't realize until it was too late was that Marcus had always resented being my partner instead of my boss. He'd spent 19 years building relationships with our clients while I'd been doing the technical work, and he'd convinced himself that he was the valuable one, that I was deadweight holding him back. The resentment had been building for years, but I'd been too focused on the work to notice. The first sign something was wrong came in April 2023. One of our longest-tenured clients, a packaging manufacturer called Midwest Container Corp. That we'd worked with for 12 years, suddenly announced they were ending our contract. The CEO, a man named Roger Hutchins, who I'd helped turn his company around back in 2011, called me personally. "David, I'm sorry, but we're making a change. Nothing personal, just business." I'd been shocked. "Roger, did we do something wrong? Is there a problem with our service?" No. You've been great. We're just going in a different direction." He wouldn't elaborate. 2 weeks later, another client, Great Lakes Manufacturing, gave us 30 days' notice. Then another. By June 2023, we'd lost 5 clients in 2 months, representing about $900,000 in annual revenue. I was panicking. I called an emergency meeting with Marcus. What's going on? Are clients unhappy? Have we screwed something up? Marcus had seemed as confused as I was. David, I don't know. I've been reaching out to our contacts, and everyone's saying the same thing. Going in a different direction. Exploring other options. It's weird. Maybe there's a competitor undercutting us on price? We'd spent weeks trying to figure it out. I'd personally called every lost client, trying to understand what had gone wrong. Most wouldn't take my calls. The ones who did were vague and uncomfortable. It's not you, David. It's just time for a change. One client, a manufacturing operations director I'd worked closely with for 5 years, finally gave me a hint. David, I can't say much, but you should talk to your partner. That's all I can tell you. That's when I should have known, but I didn't want to believe it. I'd confronted Marcus in early July 2023. Marcus, one of the clients suggested I should talk to you about why we're losing business. Do you know something I don't? Marcus had looked me dead in the eye and lied. David, I have no idea what that's about. Maybe they're confused. Maybe they're mixing us up with another firm. I'm as frustrated as you are about losing these clients. I'd believed him because I'd trusted him, because we'd been partners for 19 years. Because betrayal from someone you've built a business with seems impossible until it's happening. The truth came out by accident in August 2023. One of our junior consultants, a sharp 28-year-old named Sarah Chen, came to my office looking troubled. David, can I talk to you about something? Off the record? Of course, Sarah. What's wrong? She'd closed the door and sat down carefully. I was at a conference last week in Indianapolis, Manufacturing Leadership Summit, and I ran into Roger Hutchins from Midwest Container. My stomach had tightened. Okay. He asked me how things were going at the firm. I said fine, though we were sad to lose them as a client. And Roger got this weird look on his face and said, You do know Marcus is starting his own firm, right? We're moving there in October. The room had tilted. What? Roger said Marcus had been talking to him since last winter about joining a new firm Marcus was creating. Marcus promised better service, lower fees, more personal attention. Roger said at least a dozen of our clients were moving to Marcus's new company. He seemed surprised I didn't know. Sarah had looked at me with genuine concern. David, is Marcus leaving? I don't know, I'd said quietly. But I'm going to find out. That night, I'd done what I should have done months earlier. I'd investigated. I'd searched business registrations in Illinois and found that Marcus had filed incorporation papers in March 2023 for Davidson Consulting Group, dropping my last name but keeping his own, clearly trying to confuse our clients about which firm was which. I'd searched his name and found a new website that had just gone live, listing Marcus as founder and CEO, with language that closely mirrored our existing firm's marketing. And I'd pulled our client contact logs and discovered that Marcus had been meeting with clients individually, off calendar, for months. Marcus had been planning his exit since at least March 2023. He'd been stealing my clients for 6 months while I'd been too trusting to notice. I'd confronted him the next morning in August. Marcus, we need to talk. I know about Davidson Consulting Group. Marcus hadn't even had the decency to look guilty. He'd just shrugged. Yeah, I was going to tell you eventually. I'm leaving, David. I'm starting my own firm. You're stealing our clients. I'm not stealing anything. I'm offering them better service. If they choose to work with me instead of us, that's their decision. You've been secretly meeting with them for months, using relationships we built together. Information we developed together, trust we earned together. That's theft, Marcus. It's business, David. You're 67 years old. You should be retiring anyway. I'm 54, and I've got another 15 years in me. I need to build something for my future, not just maintain your past. There it was. Marcus had decided I was obsolete, that the firm we'd built together was now his to take. "So what's your plan?" I'd asked. "I'm giving you until October to wrap things up. I'm taking the clients I've personally managed, which is most of them since I'm the relationship guy. I'm taking our junior consultants who want to come with me, and I'm offering to buy you out of the partnership for, let's say, $200,000. That's generous, considering how old you are and how little you'd have without me." "The firm is worth millions," I'd said. "The firm was worth millions when we had clients. Without them, it's just a name and an office lease. $200,000, David. Take it and retire gracefully, or stay and try to rebuild at 67. Your choice." I'd spent that night in my home office, staring at financial statements, client lists, everything we'd built. My wife, Patricia, had found me there at 2 a.m. "David, come to bed. You'll figure this out." "He's taking everything, Pat. Everything we built." "Then fight him, sue him, stop him." "I can't. We don't have non-compete agreements. The partnership agreement doesn't prevent either of us from starting a competing business, and clients can leave whenever they want. Marcus structured this perfectly. He's going to win." But that's when I'd started thinking, if I couldn't stop Marcus from taking the clients, maybe I could make sure that winning destroyed him. Over the next 8 weeks, from August through October 2023, I'd quietly prepared my strategy. I'd met with our accounting firm and had them conduct a full financial review of the company, not to find problems, but to document the ones I knew existed. I'd met with our corporate attorney and reviewed every obligation, every liability, every pending legal issue. And I'd realized something beautiful. The company Marcus was stealing was a financial disaster waiting to happen. Here's what Marcus didn't know, because he'd never paid attention to the boring operational details he thought were beneath him. First, the debt. Davidson and Sterling had taken out a $2.8 million line of credit in 2020 to finance an expansion that never fully materialized. We'd drawn down $1.9 million of that credit and had been slowly paying it back. But the loan terms included a provision that if either partner left the company or ownership changed significantly, the bank could call the entire loan immediately. Marcus taking over would trigger that provision. He'd need to immediately repay $1.9 million or refinance. And given that he was stripping away the company's clients, no bank would refinance a consulting firm with no revenue. Second, the lawsuits. We had 3 active legal matters Marcus knew nothing about because I'd been handling them. One was a former employee suing for wrongful termination, likely to settle, but could cost $300,000. Another was a client claiming our recommendations had caused them financial harm, completely baseless but expensive to defend. The third was a vendor dispute over unpaid invoices for software we'd licensed, another $150,000. Total potential liability, $600,000 to $800,000. All of these would become Marcus's problem the moment he owned the company. Third, the IRS audit. In 2022, we'd taken some aggressive tax positions regarding contractor classifications and business expense deductions. Our accountant had warned me these might be challenged. In July 2023, we'd received notice that the IRS was auditing our 2021 and 2022 returns. The audit was in early stages, but our accountant estimated we might owe back taxes and penalties totaling $400,000 to $600,000. Marcus didn't know about this because I'd been managing it. Fourth, the office lease. We had a lease on our downtown Chicago office that ran through December 2025 at $18,000 per month. The lease was guaranteed by the company, not by the individual partners. If the company couldn't pay, the landlord could sue for the remaining lease amount, about $540,000. And since Marcus was planning to run his new firm from a different location, he'd be paying for 2 offices or defaulting on the lease. Fifth, and most important, the client profitability. Marcus thought he was stealing $8.3 million in revenue. What he didn't realize was that of our 47 clients, only about 22 were actually profitable. The rest were either break-even or actively losing money. We kept them for relationship reasons, for reputation, or because I hadn't had the heart to fire them. Marcus was taking all 47 clients without knowing which ones made money. The data was in our accounting system, but Marcus had never looked at it carefully because he didn't handle operations. I'd spent 19 years protecting Marcus from the messy financial reality of running a consulting firm. Now that knowledge was going to destroy him. I'd made my decision in September 2023. I wasn't going to fight Marcus. I was going to give him exactly what he wanted: the company, the clients, the employees, everything. And then I was going to watch him discover what he'd actually taken. I'd started preparing my exit carefully. First, I'd met with my personal attorney and restructured my personal finances to separate them completely from the business. Patricia and I owned our house outright, had healthy retirement accounts, and didn't need income from the firm anymore. I could afford to walk away. Second, I'd quietly secured a small office space in Naperville under my personal name and set up a simple consulting practice. Just me, no employees, no overhead. I'd reached out to the handful of clients Marcus hadn't contacted yet and let them know I'd be available for independent consulting work if they needed it. 5 of them signed on immediately. Third, and most importantly, I documented everything. Every liability, every pending legal issue, every financial problem. I'd created a comprehensive binder with all the information Marcus would need to understand what he was inheriting. I'd give it to him after the transfer was complete. Let him discover the truth after it was too late to back out. Marcus wanted the company? He could have it, all of it. Marcus came to my office on October 17, 2023. He had a lawyer with him and a stack of documents. "David, I've prepared the paperwork for the ownership transfer. I'm offering you $150,000 for your 50% stake." He'd even lowered his previous offer. "I don't want your money, Marcus," I'd said calmly. "What?" "I said I don't want your money. You can have my shares for $1. Marcus's lawyer looked confused. Marcus looked suspicious. "Why would you do that?" "Because you're right. I'm 67. I'm tired. You've outplayed me. You've taken the clients, the employees, everything that made this firm valuable. Fighting you would cost more in legal fees than I'd ever recover. So take it. Take the company. It's yours." "David, this doesn't make sense." "What's the catch?" "No catch, Marcus. I'm just done. Done fighting, done working, done with all of it. You want Davidson and Sterling Consulting? It's yours. I'll sign whatever you need." I'd pushed the documents across the desk. "Let's just get this over with." Over the next hour, I'd signed everything. Transferred my 50% ownership to Marcus for $1. Resigned as an officer of the corporation. Signed over my access to company accounts, company files, everything. I'd even thrown in the furniture and equipment. You'll need it more than I will. By 5 p.m. on October 17, 2023, Marcus Davidson owned 100% of Davidson and Sterling Consulting. He'd looked almost disappointed that I hadn't fought him. "So that's it? You're just done?" "I'm done," I'd confirmed. "Good luck with the business, Marcus. I hope it's everything you wanted." As Marcus left with his lawyer, both carrying boxes of files, I'd pulled out my phone and texted Patricia. "It's done. He took it all." She'd texted back, "Come home. We're celebrating." Because Patricia knew what Marcus didn't, that I'd just handed him a ticking time bomb. The explosion started exactly 8 days later. On October 25, 2023, Marcus received a letter from our bank calling the $1.9 million line of credit due immediately, per the ownership change provisions in the loan agreement. Marcus called me in a panic. "David, the bank is calling our loan." Did you know about this? Yes, I knew. It's in the loan documents. Section 7.3. Material change in ownership triggers immediate repayment. You didn't think to mention this? Marcus, you bought the company. Due diligence was your responsibility. I assumed your lawyer reviewed all our obligations. This is $1.9 million, David. I don't have that kind of cash. Then you should probably talk to the bank about refinancing. Marcus tried to refinance. But here's the problem. He now owned a consulting firm that had lost most of its clients. The ones I'd quietly retained, or who'd decided not to follow Marcus, had no revenue pipeline and was carrying significant debt. No bank would touch it. Marcus had 30 days to repay $1.9 million or default. His first mistake was assuming the clients he'd stolen would actually generate revenue. See, Marcus had promised those clients lower fees to entice them away from our firm. He'd offered 20–30% discounts compared to what we'd been charging. But he hadn't bothered to calculate whether the work was profitable at those rates. Consulting has fixed costs: software licenses, insurance, office space, employee salaries. When you cut prices 20 or 30%, your margins disappear. Marcus was about to discover that winning clients at unprofitable prices is worse than having no clients at all. By early November 2023, Marcus was bleeding money. He'd hired away 5 of our junior consultants, promising them raises to entice them to join his firm. But with lower client fees, he couldn't afford those raises. His monthly payroll was $75,000, but he was only billing $60,000 in his first month because his clients were adjusting to the transition and work was slow. He was losing $50,000 monthly before even accounting for office expenses, software, insurance, and loan payments. That's when the lawsuits started hitting. In mid-November 2023, Marcus received notice of the wrongful termination lawsuit. The former employee, a consultant we'd fired in 2022 for performance issues, was suing for $450,000 in damages. Marcus called me again. David, did you know about this lawsuit? Yes, I've been handling it with our attorney. You'll want to call him. His contact information is in the client file. Why didn't you tell me about this before I bought the company? Marcus, you bought the entire company, assets and liabilities. The lawsuit is a company liability. It's now your problem to manage. Then the client lawsuit. Then the vendor dispute. By December 2023, Marcus was dealing with 3 active legal matters totaling potential costs of $800,000. His new attorney, our old one had declined to continue representing him due to conflicts of interest with me, estimated it would cost $150,000 just to defend the cases, win or lose. And then the IRS called. On December 12, 2023, Marcus received an IRS notice requesting additional documentation for the audit of our 2021 and 2022 tax returns. The notice explained that the IRS was questioning our contractor classifications and business expense deductions. Potential back taxes and penalties, $550,000. Marcus had called me screaming. You knew about an IRS audit and didn't tell me? I assumed your due diligence included reviewing our tax situation. That's pretty standard when buying a business. This is fraud, David, and you deliberately hid liabilities. Marcus, every single document related to every single liability was in our company files. You had access to all of it. If you didn't review it, that's not fraud. That's your negligence. I'd hung up and blocked his number. Patricia and I had gone out to dinner to celebrate. Marcus was learning what every consultant eventually learns. The real business isn't client relationships. It's operations, finance, and risk management. All the things he dismissed as beneath him. By late December 2023, Marcus was in full crisis mode. He couldn't refinance the bank loan. He couldn't afford the legal fees for 3 lawsuits. He couldn't pay the IRS. And he was still losing money every month because his clients were unprofitable at the rates he'd promised. He'd tried to raise prices, but clients had pushed back. "You promised us 20% lower fees than Davidson and Sterling." That was the whole point of moving. Marcus was trapped. He couldn't raise prices without losing clients, but he couldn't keep current prices without going bankrupt. The firm I'd built over 33 years collapsed in just 10 weeks. On December 28, 2023, Marcus dissolved Davidson and Sterling Consulting and filed personal bankruptcy protection. The company ceased to exist. The clients scattered. Some came to me, some found other firms, some brought their consulting in-house. The bank wrote off the loan as a business loss. The lawsuits were dismissed when the company entity disappeared. The IRS placed liens on Marcus personally. Meanwhile, I'd been running my small independent consulting practice out of Naperville since September. Just me, no employees, no overhead beyond a small office and basic expenses. By December 2023, I was working with 12 clients, the 5 who'd followed me initially, plus 7 others who came to me after Marcus's firm collapsed. My annual revenue was projected at about $1.8 million. My costs were under $300,000, and I was taking home more profit than I'd made as a partner in the old firm. I was working 3 days a week, playing golf 2 days, and spending weekends with Patricia and our grandkids. I'd given Marcus exactly what he wanted, and it had destroyed him in less than 3 months. Marcus tried to call me on December 30th, 2023, the day after his bankruptcy filing was finalized. I'd unblocked his number by then, curious what he might say. "David, I need to talk to you." "What do you want, Marcus?" "I need help. I'm ruined. The bankruptcy destroyed me. The IRS is coming after me personally. I can't get hired anywhere because everyone knows what happened. I need work." "And you're calling me why?" "I thought maybe you needed help with your practice. I could work for you. I'm a good consultant, David. You know I am." "Marcus, you're a good salesman. You were never a good consultant. That was always me. You spent 19 years taking credit for my work while planning to steal everything we built. Now you want me to hire you? That's amazing. I'm desperate, David. Please." "No." "Just like that? After 19 years of partnership?" "You ended our partnership when you started secretly stealing my clients in March. You ended it when you told me I was too old and obsolete to matter. You ended it when you bought me out for $1 while planning to take millions. You don't get to call me now that your plan failed and ask for rescue." "You set me up," Marcus said, and his voice had changed. No longer pleading, now accusatory. "You knew about the liabilities and you let me take the company anyway. That's fraud." "No, Marcus, that's due diligence, or rather your failure to conduct it. Every single liability I mentioned was documented in company records you had full access to. The loan agreement was in our files. The lawsuits were in our legal folders. The IRS audit notice was in our tax records. You could have reviewed all of it before buying the company. But you didn't, because you were so convinced you were smarter than me, so sure that client relationships were all that mattered, that you never bothered to understand the actual business you were stealing. "I'm going to sue you for fraud," Marcus threatened. "Go ahead. I've already talked to my attorney. You have no case. I didn't hide anything. You failed to look. I didn't lie. You failed to ask. I didn't force you to buy the company. You demanded it, and I accommodated you. You're not a victim, Marcus. You're a cautionary tale about arrogance and greed." I'd hung up. That was the last conversation Marcus and I had in 2023. He'd wanted to destroy me by taking everything I'd built. Instead, he destroyed himself in less than 3 months by not understanding what he was taking. By December 31st, 2023, my first year running an independent practice was complete. I'd billed $1.8 million, netted over $1.4 million in profit, and worked about 120 days total. Marcus, according to mutual acquaintances, had lost everything: his ownership in the firm he'd stolen, his professional reputation, his personal finances. He'd ended 2023 bankrupt, unemployed, and facing IRS liens that would follow him for years. I'm 67 years old. I spent 33 years building a consulting firm that grew too big and collapsed under liabilities I'd accumulated but understood. I spent 10 weeks watching my partner steal that firm without understanding what he was really taking. And I spent the last months of 2023 building something new, smaller, simpler, entirely mine. Marcus stole every client I had, so I let him have the company, and everything that came with it: the clients, the revenue, the office, the brand, and the $4.2 million in liabilities he never knew existed. He thought he was stealing success. Actually, he was stealing failure wrapped in the appearance of success. And by the time he realized it, I was already gone, starting fresh, building something profitable. That's called justice. And it took less than 3 months,